I feel like life is full of noisemakers, and so is the forex industry. So why am I saying this? Now, if you go to maybe Instagram, Facebook, whichever social media, or even any forex community, right? So for instance, I'm using Trendline. You will hear people like, oh, in this era, who still uses Trendline, right? So if the next person uses SMC in this era, who still uses SMC? And so if you're using ICT, whichever strategy, demand and supply, so everybody has a story to tell. And I feel like people just want to justify, their trading strategy. They want to, at least feel that their trading strategy is the best or works better than the other person's strategy. For instance, behind the scene, I'm also a music producer. Now, if I'm using Fruity Loops, other producers will be like, in this era, who still uses Fruity Loops? Okay. Now, if I go and start using Reasons, they'll be like, who uses Reason? Okay. Then now I purchase probably Pro Tools. Others will be like, no, Pro Tools is not the best. You should be using Logic Pro. So I'm like, so if you keep on jumping from these softwares, I think we're going to have a problem, because it's going to take you time, to understand how this new software works. And that is just the same in the forex market. Now, if I'm using Trendline and somebody tells me that, yo, Trendline is trash, you should be using SMC, you should be using demand and supply, you should be using this, right? So the time that it will take me to understand that new concept with this, that ICT with, is going to take time. Remember, probably I was developing my strategy from the start, and it has taken me years, to understand my strategy better. But then somebody tells you that, no, you should not be using this, you should be using this. So the time that you will spend learning that new strategy, you're going to get confused, right? So for me, I think sticking to one thing is the best thing, right? And since we are talking about the forex market, all I need you guys to do, or let me just say, all I recommend is understand the market in general, right? So if somebody tells you, no, don't use this, understand the market. That is all I do preach every day. When you open your trading view, the first thing you need to do is understand the general market direction, right? Whether you are using ICT, whether you are using SMC, you need to understand what price is doing. That is the price action, right? So once you get the general flow of the market, that is when you come in with whether your ICT, whether your supply and demand thing, whether your trend line thing, whether whichever strategy, right? We have ICT, SMC, you guys know them, right? So like I said before, once you understand the market action, what price is doing, that is when you incorporate your entry strategy, your ICT, SMC, trendline, whichever, right? And it works even if you trade all this scalping, day trading, whichever, swing trading. The main thing, guys, is just to understand the market in general. That is all I do preach, right? Because once you understand the general flow of the market, you will be okay with what the market or what price does, right? At the same time, patience, right? So in this video, guys, I just want to talk you through and show you how I go deep down with my analysis, guys. First thing, you're just going to understand the market, interpreting the market, right? Because if I'm using SMC or ICT, demand and supply, trend line, right? But then I don't understand the flow of the market. I might just open maybe 15 minutes time frame. Then I say, okay, throw my things. This is my supply. This is my demand zone. Okay, price has hit this level. Okay, so let me just start looking for my buys. Then not forgetting the general flow or the general structure of the market. Where are we currently? Which position are we, right? Because I might be, the 15 minutes or even 1 hour, whichever, even the 4 hour might be telling me something different. But then when we go to maybe the higher time frame, yo, 15 is telling me to buy, then 1 hour is telling me to sell, 4 hour is telling me we are moving sideways. So at the end of the day, I'm going to get confused, right? But then when you understand the general flow of the market, the structure of the market, everything everything will be easier for you to interpret, right? So real quick, let's just start our analysis. So how do I interpret the market? So the first thing, I usually go to the highest time frame. I might start from the weekly time frame or even the daily time frame, right? So real quick, let me just start this analysis. For instance, this was GBP USD, and I'm going to show you why you see we have this market hitting that take profit level, right? So this is just a very simple analysis basically, and if you look at this, basically you understand that the market, of course, this is a trend: lower low, lower high, lower low, lower high, lower low, lower high. But then before we go into that, the first thing we need to understand is marking out the key levels, right? So if you look at this, basically we understand that we had this as a high. Remember, this is still based off the daily, and there this was the last low, right? And understanding or interpreting the market structure, basically you see that price already took out this uptrend, and generally the market was down, in a downtrend, right? Whichever, yeah. So let's not talk about this, we're just trying to interpret the market, right? So the next thing, you see a low right there, and price giving you a high, a low, a high, low, high. So such kind of thing, right? And of course we also need to have this level right there, and also mark out that level right there, correct? Now I think yesterday this is where the market was right here, I believe so. So you mark out also the last low, which was this level right there, right? So let me just remove this, I don't need it. I can also let me just remove everything for you guys to see. In fact, let me just clear this market right now. So with that, I think we should start. This is the highest, let's just have it right there. Just a minute. This is the highest right here, and this was a level that price broke, so we need to take care of that too. And we had that as a previous low, and of course that is a high. Now if you look at this, basically we don't have any trend line yet, we're just trying to mark some key levels. And why do we mark these levels? The reason why we have these levels marked is just us trying to when we go to the lower time frame, we will be trying to understand what price is doing around those levels, right? Then remember, generally we understand that we're in a downtrend. At the same time, we might be in a downtrend, but then when we go to the lower time frame, we will we might see that price trying to react, kind of giving us uptrend, and that is what we will be reacting to, right? So real quick, if we go to the H4, this is it. Now sometimes if you look at this market in this perspective, this is just a downtrend, right? If you can't interpret the downtrend clearly, or if you can't see what price is doing, I do recommend you guys to flip your screen just like that, right? So once the screen is flipped, you see that, oh, this is like an uptrend, okay? But then basically remember, we are in a downtrend, so don't forget to flip your screen back. You might find yourself taking a buy instead of a sell, correct? Now this is it. Now the next thing I do like to look out for is market structures, right? So I'm talking about patterns. Remember, we've not yet included anything like trend line. Patterns. The reason why I do recommend pattern is it will tell you direction of the market, what price will want to do next, right? So this is it. If we were looking for buys, then we should be anticipating the market to give us some patterns, because at the same time we understand after every impulse move, we understand the market gives us patterns or continuation, right? So And of course, if we're looking for sales, we should be looking for these moves: impulse correction, impulse correction. But then before that, you also need to mark out your supply and of course your demand zone. So after every impulse phase right here, we anticipate correction right there. Correct. Now this is it. Let's say we had this as an impulse phase, so mark out this level right here. Correct. The moment you mark out that level, then look out for the next level that price might try to go back or try to bounce off, which is this zone right here. The reason why that might be also a possible a key level around this level for a while, right? So if you see maybe the market is pulling back, right, we understand, yes, if it breaks out of this anticipated pullback zone, we still understand that there's still this level right here, and of course, see how price is going to react around this level. Right now, this is when we start introducing a trend line. This to me might act as a continuation pattern, right? So let's just go to the H1 real quick. This is it. When we are at the H1, let's just adjust that right there. Now once you see price approaching this key level, the next thing is just understand what she's going to do around that level, and that is when we look out for entry properties, whichever entry property, whether you go in based on your candlestick property, reversal property, you guys know how you go in your entry, right? But then let's continue. I'm not going to talk about my entry, right? So the next thing, let's just take it back, let's just follow this market along, right? Over here, once again, we saw price went up. Then now the next thing you need to do, mark out this level once again, because that is where price really took off from, right? The market gave us an impulse phase from this level all the way up. Correct. Now the next level, so you need to mark, is this zone, because that is also a possible level that price might come back for a retest. Now to me, I won't take an entry once I see the market just drops with candlesticks after candlestick, because that just tells me that we still have some bears or even bullish pressure. I need to see price reaction, and this is what I'm talking about. Let's say we had this as our level, then I see the market just drops candlesticks after candlesticks, something like this. This just tells me that this is just a very strong trend, so I do avoid such kind of market. All I need is the market give me this kind of a reaction. That is just another continuation. Now if you look at this level, we never had that kind of a thing. Of course, the market also did this and also did that. Now that never happened. Now if price does that, at the same time, that is when we start incorporating our trend line right here. And with that, we can see we have our fast touch. So I think I should just remove this. We have our fast touch right here. Let me just call out this. We have our fast touch right here, should be our second touch. So if you look at this as a higher high, higher low, remember the screen is still flipped, guys, don't get confused. I just want you guys to see the picture. Basically, this is what we are still talking about, right? So this is it. If you look at this, we have our high and a low right there. So for me to look for an entry right here is crazy, guys. I do like taking my entry based on key levels, based on touches. Why will price respect this joint and try to reverse from this level? And of course, I know most people or some people do trade flip zone, but then to me, I try to avoid this kind of market. So the next thing is just for me to wait for price to give me that touch, and that is when I look for my entry. But then now let's just continue. If you look at this approach right here, this is also kind of a continuation right there. That's also another continuation pattern. Right now, you just saw me talking about that was the GBP USD sell right here. So this is it. If you look at this, let me just try to adjust this right here. We had the market giving me an impulse phase from here, price just giving me an impulse phase right here, right? So that just tells you that, okay, be patient, wait for another opportunity. Look at this is the thing that I don't like, seeing the market do. And at the same time, if I don't see my reversal structure, I don't go in for my entry, right? So better wait for price to come back and give you your entry properties. And at the same time, if I try to extend this, you can see now this is a very clean touch right here. We've seen now our first touch right here, second touch, the price never gave us our third touch right there, and we had our third touch right there. So that is now where I'm looking for my entry property. And at the same time, look at this approach. Yes, you might see that this is candlestick after candlestick, but it is a trend right there. Let me show you that maybe at the 15 minutes too. Now look at that. You see price doing this, comes down, respect this level right here, then gives you this kind of a pattern, then goes up, gives you a confirmation. Now you guys can see that as an inverse head and shoulder right there. Of course, flip that join, that's a head and shoulder, and that is when it's a good time to go in for your sell properties. Sell position right there. Have your stop maybe above, maybe you can have it right there, whichever. 40 pips, 1:3, and then that is when 1:3, that should be, if that was, let's just say that is 40, right? So 120 around that, but then you see price has just dropped more than that. So it's just that simple. If you don't understand what I'm talking about, just try to rewatch the video and you will understand. So check out my Telegram link in the description box below, and adios mi amigos, peace.